Hi CoPeace team, this is Brad. As an investor in CoPeace since 2018, I'd like to know, from the looks of it, CoPeace is going to need to continuously raise capital for an extended period of time in order to build up a sizable portfolio of holdings. How much capital do you think you need to raise to get to the point where investment and service income can support the operation of the company and provide a competitive return to shareholders while fulfilling its mission to do good?
Hi Brad, thanks for that question. Excellent question. The vision for the company is to derive revenues not only from the portfolio holdings where we make direct investments, but also from the wholly owned subsidiaries that will be generating income from our service activities. From the way it looks to us now, we expect to raise about $30 to $50 million in total that to get us to the point where we have income being derived from our service subsidiaries to defray operating costs and continuing operations, and get us to the point where the investment in our other holdings start to return capital to us in the form of either dividends or exits.
Hi CoPeace team, this is Amy. As an investor in CoPeace since last year, I'd like to know, how do investors get a say in the company when the founder owns 80% of it?
Thank you for that great question, Amy. CoPeace is legally a public benefit corporation, so we are legally bound to care about our stakeholder value over our shareholder value. We've created an incentive plan that includes our diverse board of directors and advisors and our employees so that everybody participates in our growth. And we've created quite a few different ways to engage the community. So we make sure the community is involved in all of our decisions going forward. We have a community page on our site and we have social media outreach. So we want to continue to engage the community and continue to grow that part of our business.
Hi CoPeace team, my name is Sam. As a CoPeace investor, I'm curious to know, what is the greatest challenge you guys are facing right now?
Hey Sam, thanks for that question. First of all, one of our biggest challenges is to tell our story. As an impact or ESG holding company, that's a little more challenging to explain to people who we are and what we do. Secondly, we will always be raising capital, and as most people know, that's not an easy task, so I foresee that as to be an ongoing challenge as well. CoPeace is based on 3 pillars, which is raising capital, selling our services, and then investing in impact companies. Appreciate your question. Have a great day.
Hi CoPeace team, this is Nia. As an investor in CoPeace since last year, I'd like to know, how do you plan to use the investment proceeds? Investments, services, operating expenses? What size investments do you expect to make to secure controlling interests in multiple companies?
Another great question, Nia. Thank you for the question and your support. The good news is we've already been looking at quite a few different companies. We've looked at over 150 so far, and there's a lot of activity in the space where people are doing good things for the world and providing a strong return. We're trying to evaluate the impact socially, environmentally as well. We anticipate a check size of $250,000 to $2 million, depending on where our capital raise is at the time. And we envision different stages. So we see companies that are coming to us at the growth stage, as well as companies that are looking to gracefully exit with their babies. So we feel like we're in a good spot. We like our model, we like our timing, and thank you again for the question.
My name is Tammy Crawford, and I am a CoPeace investor. And my questions for you are, what is your burn rate? Also, when will you be self-sustaining, and what are you doing to reduce overhead?
Hi Tammy, thanks for the question. Our burn rate currently runs at about $35,000 a month in terms of our payroll, and then we have flexible spending relating to the use of contractors judiciously that can vary from anywhere from $10,000 to $12,000 per month. The idea behind this is that we are continuing to develop the income from our service wholly owned subsidiaries, which will help defray the cost of operations while the asset base grows and gets to the point where it starts to produce either dividends or income from exits.